Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news that leverage screws are being applied to globally important big banks. But first, American stock indexes fell 1% in late morning trading today, their biggest fall in 6 weeks, as weak Chinese trade data and a cut in the OECD's global growth forecast spark fears about a global economic slowdown. The OECD forecast suggests that emerging markets may be in for a rough ride, but they also forecast a continuing positive outlook for trade for the OECD members. The presumption is that rising interest rates, along with low prices for hard commodities, will hurt debt-laden markets. They think China's growth will slow from 6.8% this year to 6.2% in 2017. They peg New Zealand growth at 2.3% and headline inflation at 1.8% by 2017. This comes as global financial regulators publish new rules to stop banks from becoming too big to fail, which could force the world's largest lenders to raise as much as $1.2 trillion by 2022 in debt or other securities that can be written off when winding down failing banks. The new rules mean that these institutions must have resources readily available for bail-in, equivalent to at least 16% of risk-weighted assets in 2019, rising to 18% in 2022. That implies an effective leverage rate of only 5.5 times, about half the leverage banks in New Zealand have. In Australia, the bank reporting season has kicked off with a local too-big-to-fail ANZ issuing their annual report, and that revealed that CEO Mike Smith had total compensation last year of more than 10 million Australian dollars. The same report showed that ANZ New Zealand's boss, David Hisco, was paid 4.8 million New Zealand dollars. Back in the US, the Labour Market Conditions Index has come out more positively than analysts were expecting. They were expecting it to fall, but it in fact rose. In New York, the US Treasury 10-year yield benchmark continues its sharp rise and is now up to 2.37%. Local swap rates jumped in response to the weekend rise on Wall Street and will now probably follow again today. US benchmark oil prices holding at the lower levels it reached on Friday, now still at $44 a barrel, and the Brent benchmark is at $47 a barrel. The gold price also held after Friday's drop and is still at $1,088 an ounce. New Zealand dollar starts today essentially unchanged as well, at 65.4 US cents, 92.8 Aussie cents and 60.7 euro cents. The TWI is at 71.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.